The drop having a big impact on energy stocks with the XLE ETF falling 2%. But our next guest sees big opportunity in the pullback. Let's bring in Rob Thummel, Tortoise Ecofin portfolio manager. Rob, good to see you. You know, the real change of script here, it seems. You had this storyline out there of very tight oil supplies. It wasn't going to abate anytime soon. You had that near-term shortage, a scarcity that was showing you that near-term prices were higher than the whole story held together. But now we have a pretty steep little downtrend from the highs in crude, in gasoline as well. What does that tell you about the supply-demand picture?
Yeah, Mike, you mentioned it's scarcity, right? So, yeah, we were worried. The world was worried. We didn't have enough oil, at least for now. And now we're in a situation where you've got China demand slowing, and it might not even have any demand growth out of China this year for oil on the demand side. Supply, there's rumors that maybe Iran will be able to pump more oil and export more oil, so that will be more supply. So those two dynamics working together mean you're going to have a lot more oil added back to the supply, which has then been the result is just lower prices ultimately, and you can see what happened today as a result of that.
Sure. And, you know, I guess you should fall back on the idea that the current level of prices are still relatively healthy for most parts of the industry. So it's not as if this is creating any new stress. But I wonder what you think it does mean for, you know, on the equity side, investing in various parts of the energy space.
Yeah, no, that's a very good point. So we still are very low in oil inventories, 10 or 15% below the historical average globally for oil inventories. And if you put that in context, the world would have to produce more oil than it consumes by about 800,000 barrels a day for the next year just to get inventories back to normal. So there's no doubt there's still that scarcity value in oil prices, which is actually an opportunity for the energy sector. The energy sector broadly, even with oil prices where they are today, and they could even drop a little bit, still generates a lot of free cash flow, and a lot of that free cash flow is being returned to the shareholders in the form of high dividends, stock buybacks, and in some cases debt pay downs. And that's an attractive combination and compelling for investors that are looking for good returns in a market like this that's pretty choppy in other sectors.
For sure. I guess you focus to some degree on energy infrastructure. So a lot of those cash flow plays, the ones that essentially volumes maybe matter a good deal more than price. Are there any particular subsegments that you think stand out to you?
Yeah, you're right, Mike. At Tortoise, that's what our focus is, energy infrastructure. And we look at the energy sector broadly. So if you look at things we like, for instance, Cheniere Energy, it's the largest exporter of LNG in the U.S., and the U.S. is the largest exporter of LNG in the world. If you think about two mega themes that we're going to really play out over the next several decades, it's global decarbonization and energy security. And you look at companies like Cheniere Energy, it can do both, and that's a bit of a rarity. There are companies like Plains All American, that's another example. Now, it transports oil out of the West Texas, out of the Permian Basin. A lot of your viewers are familiar with that. The thing we like about Plains is it's almost an 8% dividend yield. Look across the stock market, you can't find a lot of 8% dividend yields, but you can find it in a lot of energy infrastructure names, and Plains is an example of that as well.
Broadly speaking, would you be viewing the energy sector, at least in this country, as being a little bit more of a kind of long-term, steady decline type story? Or has anything changed with this recent episode after the Russia-Ukraine invasion that you think there might actually be a new round of growth investment here, contrary to what a lot of people thought a couple of years ago?
Well, I think what the world's telling us right now is that the world needs more oil and gas. The global demand for oil and gas is back to pre-pandemic levels, but the global supply is not. The world's also telling us we need reliable sources of oil and natural gas. And so where does that come from? That sits square in the United States and Canada, where the U.S. and Canada can provide, and not only domestically, but globally, more oil and gas to the rest of the world, which enhances global energy security. And then a lot of the oil and gas companies here in the U.S. and a lot of the energy companies collectively are really working on decarbonizing their footprint. And so big picture, we think that the setup long term is pretty strong for all the energy companies in the U.S., and they will be able to adapt as changes happen like they do in all industries.
Yeah. All right. So maybe there'll be a next act. We'll see. Rob, thanks very much.